The Morgan Report with David Morgan. Discover how to build and protect your wealth at themorganreport.com.
David Morgan with the weekly perspective for the week ending 17 July 2026. Well, I'm going to be brief. I will be speaking at the MoneyShow in Las Vegas. I will be doing a panel and also a keynote on the right investments for you, and also look at the gold and silver markets. No surprise there. It's at Caesar's Palace. Send it out to our mailing list a few times. If you're there, please come up and say hello. So with that aside, I would like to go into the discussion that's been going on now from me for a few weeks, and that's about the Comex inventories, whether or not the Comex is being drained or not. And someone asked, well, you picked your points, I said, not really, but, that's a fair question. So this goes back 20 years. And, you can tell here from the key that this color green, the lower, is eligible. So you can see over the last 20 years that the eligible inventory has basically increased. And the darker green is the registered. Now, if you have a pretty keen eye, you can see it's, wider here than it is here. It gets very low. Wider here than it is here. It gets very low. Pretty wide here. It got very low here. Extremely big here when it went from London to New York and back into London. But the trend is on top of the eligible. And you can either do the one that I just showed you, which is probably the most accurate. In other words, the eligible category can be registered, but it's not the dealer's inventory. Do the dealers put some in the eligible? Yeah, but not very much. They do not waste a penny. They leverage everything to the max. So the registered ebbs and flows, but you can see if you want to draw a line through there, it's on top of this one, and it's really kind of the ebbs and flows. It doesn't really. It's not doing what the eligible is. But that's 20 years. I want to bring that to your attention. So when I was doing that, thinking about this week's perspective, I thought, well, let's go back and talk about something that I've talked about over the last 25 years, I don't know, 4, 5, 6 times. But it's pretty interesting as far as, what went on in the Comex. So if you come down here, it's really 1989, 90, into 91. You see the inventory in the Comex is around 300 million ounces. And right around this area here, Warren Buffett, Berkshire Hathaway, bought almost 130 million ounces of silver off the Comex. That's important, off the Comex. And you could see what happened. From that point, it came down pretty rapidly. Now, what's interesting about this whole process was, you could say, absolutely, that Warren Buffett drained the Comex. You see how low it was here? Inventories built. Warren took a look, said, hey, I don't want to buy Pan American. I don't want to buy mining stock. I want the real silver. My order was 129.7 million ounces of silver from the Comex. I repeat. But what actually happened was the Comex is only able to deliver from the Comex without depleting everything, or pretty close to it, 300 million. So obviously from that, but you don't know how much of that's already owned and eligible, how much was free basically to get to them. In other words, what the dealers were able to acquire like overnight. They said them 90 million ounces. That is not 130 million ounces. It's a shortfall of 40 million ounces. And what happened after they sent him the 90 was lease rates on silver went up to an astronomical number. And it stayed that way for quite some time, over a year, as the dealers brought to him the physical 40 million that he had bought. And he let him off the hook because he was earning that huge premium on leasing that silver until they brought it to him. So eventually they got the 130 million ounces, round number, to Mr. Buffett, and that all was sent to London. And no one knows to this day exactly what took place. But what we do know is that the SLV started with JP Morgan with 130 million ounces in London. Coincidence? Well, you think about it. So I wanted to be into the, I don't know what to call it, total truth process, maximum transparency. The sub-story here was that the Comex had a problem. They couldn't deliver 130 instantly. They gave him 90. They made up for it over some lengthy time. They eventually got what he bought. He was okay with it, getting that 15, 17% lease rate. Went to London, SLV starts. But what most probably don't know is that after that started, the CME, Comex, came up with a new rule. And the new rule was that one entity could only have 1,500 contracts, which if you multiply by 5,000, you all know is what? 7.5 million ounces, right? But there was no limit on the number of people or entities, so it could be 10, which would be 75 million ounces. It wasn't like 1,500 total. It was 1,500 per entity. That lasted, I don't know how long, but I checked recently, and that went away a long time ago. So my point being that, again, going back to the big picture for a long period of time, can it happen? Yes. Will it happen? Possibly. Right now, however, as I showed you on the previous slide, for the last 20 years, the eligible is built up like crazy. This dark green, of course, was registered. So they purportedly had all registered back then. The eligible category didn't start until there. But even with that 300 million, why is it that they were only able to deliver 90? Scratch your head. I don't have an answer. I'm just showing you what took place, letting you know what took place. So I think I'll leave it there. Maybe a couple other things here. So I was honored by being on Rick Sanchez's program yesterday. It was at least 35, 40 minutes, I believe. It's posted on my Twitter account. And I want to thank Rick for inviting me on that program. Enjoyed it quite a bit. Pretty tough questions, but I feel them to the best of my ability. And lastly, as I said earlier, I will be in Las Vegas speaking at the Money Show, and this is the final slide for there. If you become a member of our premium service, you do get a 30-minute strategy session with me, one-on-one. It says for free. Basically, it is. I mean, you have to sign up and pay us. You get the session. But I do better than almost anyone in the industry as far as letting you have a free trial. So you pay for it. If you don't like it, 30 days later, you get your money back. 60 days later, up to 60 days later, you get your money back. So in that 30-day, 60-day period, you could have a complete session. We could go through what your goals are, how much to allocate, all the questions people have. They're always a little bit different, but there's some that are very similar. And we go for what suits you the best. And once that's accomplished, if you decide after that session that you'd rather not subscribe, then that would be free. If you pay for it, pay for the report, you still get the 30 minutes, and that's also really free. In other words, I charge for consulting, but if you're a member the first time, you get that 30 minutes. So something to think about. A lot of people do have some hesitation and, want some questions answered. I'll leave it there. I guess I better mention over here on this bottom of the report, buying gold and silver near spot. This is true. It's an affiliate situation, but it's primarily for stackers. It's people that want to stack, month in, month out. For large purchases, it's really better to check other situations, other dealers. Not that this one isn't good, but it's structured really for the people that, like to buy, every month or every quarter or every half year or that type of thing. That's what it's structured for. the way it works is you're actually buying silver near spot for a commercial bar, which of course has the lowest markup. Once you buy the silver, that's in your account. And once it's in your account, if you want to convert that silver bar into a coin, well, there's a premium. And the premiums vary, as we all know. So you will be told you've got this much silver, which converts to this much fiat. But if you want to put it into a silver eagle, the premium today is make up a number, $4. So it's going to cost you $4 more per ounce than the ounces that are already in your account. People that don't read the terms and conditions but check the box and say they have read them sometimes are a little surprised. Now, if you buy it at spot or near spot, slightly above, and you take a commercial bar, there's no added fee. It's that you probably have to pay for transportation. So it's something to keep in mind. It suits some people very well. Others, probably, as I said, be better off doing something else. So I'll leave it there. I'll be back with you hopefully next week after the Money Show and give you some insights on that. This last comment, I was at the Montana Mining Association, very upbeat, very positive. Montana is really coming back to being a mining-friendly state again. There was a person from Hecla Mining that finished out one of the sessions, and of course they take questions, and I asked him about silver being a critical mineral, and he was a government rep from Hecla doing other things, but he was like their go-to guy to go to Washington, D.C. I asked him, has the government thought about maintaining or building a strategic stockpile like we had prior to 1986? And he said he didn't know, but he complimented me and said that was an excellent question. So probably follow up with him in a month or so, month or two, and just give him a quick call and see if he actually did anything on that or not. Had any update for me. So that's it. I will close out now. I'll be back with you next week with another weekly perspective.
The U.S. government debt is about to cross $37 trillion. That's not a typo. That's trillion with a T. Tariffs are being used to try and even the playing fields. Global supply chains are shifting. Inflation isn't going away. And the value of your dollar? It's quietly being drained while no one is really talking about this. The truth is, we're living through the early stages of a financial reset, whether anyone wants to admit it or not. And if you're still relying on mainstream headlines or financial advisors who just tell you to write it out, you could be blindsided when things really shift. That's where the Morgan Report comes in. For over 25 years, David Morgan has been helping investors cut through the noise. He tracks what actually drives markets, from precious metals and mining stocks to global debt and monetary policy, and show you how to protect and grow your wealth when the system is under stress. This isn't just about gold and silver. It's about having a clear-eyed view of where things are headed and making sure you're not caught off guard. The Morgan Report gives you real research, honest analysis, and strategies you can act on, even in a world of rising debt, unstable currencies, and economic uncertainty. Go to themorganreport.com today. Download your free report. Get informed, get ahead, and take back control of your financial future. Themorganreport.com, because $37 trillion in debt won't fix itself.